Testing, testing, 1, 2, 3, testing. This is Kathy. If you hear my voice, please type in yes into the chat, Kathy box. I'm just getting my screen to show in just a second. Okay, great. So it looks like my screen is good, my voice is good. So we are ready to get started. Thank you so much for bearing with the delay today. I had something going on with my son, so I needed to just push it out a bit. But nonetheless, we had a fabulous evening, morning trading. You know, for those of you that are in Asia who oftentimes will ask, are your trades coming out in the right time zone for me? As you see, as you saw last night, I've got trades that do come out in Asia. We had a very nice, we had some very nice opportunities in dollar CAD last night. We laid on a Euro Kiwi trade that we floated for a little bit. The Kiwi yen would have worked out beautifully. And then we had some great trades this morning too in the New York session. So bottom line is there's, for the most part, something for everyone in terms of the time zone that we trade. Now, of course, not every single day we'll have Asia session trades. Almost every day we have New York session trades, but Asia session trades tend to be more selective, and they actually tend to be more higher probability. I mean, believe it or not, Boris often says to me, if you just traded the Asia session trades, they oftentimes will hit target much more, because usually I don't close them, early. Sometimes I did, like last night, but they tend to be more leisurely than the New York session trades, which we'll get in and out of. Regardless, it was a good morning. We were up 80 pips on our regular Kathy channel zero Kathy trades. We had 40 pips in Euro Kiwi last night for that hit profit, when we check the charts in the morning, for 123 pips today. So that was really great. And then, I stopped because I didn't want to get greedy, but we talked about how we had some really nice zip signals that were worth looking at. And, for those of you, let me just pull up my zip chart. Kind of crashed earlier. Let me just pull up my zip chart again. Sorry, 1 second. And those continued. I do tend to be a little cautious after the first wave, because we do trade initial momentum. But some of the ideas that I had was selling Euro Aussie. Even then, it did retrace a bit, but that definitely gave us our 20 pips. I know some of you caught the really beautiful Aussie Swiss trade, and this one saw very little retracement, where fundamentals and technicals are completely aligned. I don't know why it's taking so long, but when it loads, you'll see that risk on is good for Aussie. It's good negative for the Swiss franc. I really don't know. Let me try pulling it up here. Crashed me earlier, which is why, probably part of the reason why it's not working right now. But anyhow, it closed here. Really beautiful move. This one would have been actually a great smooth 40 trade had we taken it, and perhaps that would have been a good idea. But regardless, bottom line is we had some really great trading today. We got really lucked out on that end. And the zip, has proven to be very accurate for us. Okay, so as we kick off the trading week with some nice profits, let's look at, what the outlook for the individual currencies are, because we still have 4 other trading days. Unlike last week, we don't have major events like the FOMC rate decision, non-farm payrolls, employment reports from a whole bunch of different countries, Bank of England rate decision. So we don't have, all of that high-level event risk this week. We do have one rate decision from the Reserve Bank of New Zealand, and they're not expected to do anything. We'll talk more about that in a few minutes, but the RBNZ is not expected to do anything. And I believe, that's probably the highest event risk. Let me just check my calendar. I mean, we've got inflation from the US, which really isn't all that interesting. Oh, UK has labor data tomorrow, so that's going to be interesting. The zoo survey we know is going to be weak. And you know, for the most part, that's kind of it. I mean, we've got a smattering, a couple of other things. We have Q3 Eurozone GDP revisions, but for the most part, that seems to be the main focus. So we'll have to see how things do. First and foremost, you know, today is a widely risk positive day. And there are still two main themes in the markets right now. One is the election. Over the weekend, Joe Biden was announced as the president-elect, but Trump is putting up a good fight. And not all Republicans have completely recognized, you know, Joe Biden. So this will get drawn out. And, you know, I assure you there will be some negative headlines, some contesting headlines that may not make this equity market rally a one-way uptrade. I mean, it could be some setbacks. And the really big news this morning was that Pfizer said they had a vaccine that was 90% accurate, or they think it's 90% accurate to prevent the coronavirus. And you know, that's you know, very, very positive for the market. Sent stocks surging. Dow futures are up 1,600 points, biggest move I've seen in a really long time. The dissemination of it will be tricky because it's as far as I understand, and I'm sure, you know, Boris probably had done a little bit more reading on this. It's a vaccine that requires two different shots, and it needs to be frozen. So while in some countries that could be easier to disseminate, in others it could be more of a challenge, particularly underdeveloped nations. But we'll see. I mean, it's not, you know, it's not smooth sailing. But what it does tell us is that, you know, companies are on the right track, and perhaps, you know, they or someone else will find a way to make it one vaccine. So, you know, we're moving in the right direction, and I think the market likes that. So in terms of the outlook for currencies, on bullish dollars, you know, dollar is getting, and risk in general is getting pushed sharply higher as a result of this vaccine news. And I think we could get a little bit more continuation. Although, you know, I'm still primarily bullish dollars against yen, but also bullish dollars against euro, sterling, as I see this week's economic reports more negative than positive for those currencies. Euro, same story, nothing's really changed. Wave 2, you know, a really big problem for the region this weekend. France, Italy, even with their lockdowns, you know, it obviously takes a little while, but even with their lockdowns, they're reporting record high new cases. Germany reported record ICU usage. No, none of this is good news. Although the governments are saying that their lockdowns aren't as widespread, and so at least in France, they don't expect as much economic pain. Regardless, ECB is expected to lower interest rates, or sorry, ease monetary policy. We don't know if we're going to get an interest rate cut, but ease monetary policy next month. Data is most certainly going to worsen as it reflects this impact of the lockdown. So I'm still very bearish euros. I know it's up, it's above 118, but it's not really getting much more above 119. I think maybe that's all she's got, and and that's why we've got our radar set for any fresh kind of euro selling opportunities. And you know, we can look at that in a little closer later. Pound, same story. UK labor data coming out later this week, and I'm definitely not bullish UK labor data. I think that you know, that could be worrisome for investors. And you know, UK's in the same boat as the Eurozone, where they're in lockdown, month-long lockdown minimum, and you know, data is going to start to reflect the economic impact of lockdown. Australia, I'm bullish Aussie, which you know, is a flip from recent weeks. For the most part, the Australian economy is reopened. Data hasn't been terrible. It's actually been quite good, and it should continue to improve as the economy reopens. It's a risk currency, which should benefit from all this good news. The only real problem for Aussie is that they're embroiled in this trade war with China, and China doesn't seem to be letting up, and it is a serious problem for the Australian economy. But I think for now, it seems like the vaccine, the clarity in the elections is the driving force of Aussie. I'm also very bullish. CAD data has been pretty decent. IVPMI increase, labor data has been pretty okay. BOC, Bank of Canada, far less dovish than everyone else. Oil prices are up 3.5%. We have no data from Canada this week, so for the most part, good news. And it should be good for Canada. And I think I'm still very bullish CAD. I mean, this was one of the core views that we traded this morning, short Euro CAD. We got burned on the short Aussie CAD, but it is what it is. Dollar CAD worked out, Euro CAD worked out. Kiwi, I'm actually neutral bullish Kiwi. The only reason why I am not full-fledged bullish Kiwi is because of the RBNZ rate decision. I think that RBNZ has every reason to be less dovish, but I don't know if they will be. I mean, the last time they talked, they were still talking about the possibility of negative interest rates. I'm not sure if they're ready to make such a dramatic turn, suggesting that it's no longer needed. They're getting there, and that's certainly the reality. But I'm not sure if they are quite ready to say that. And for that reason, I'm neutral RBNZ, and we'll see. We should have some other opportunities after RBNZ. RBNZ is tomorrow night, so it still gives us a good amount of trading for the rest of the week. Bearish Swiss francs, bearish Japanese yen. I like this rally in stocks. I think that we may get some more positive headlines from the medical sector. It seems like Fauci said that Moderna may have similar results as Pfizer. So as I said, they may not be the only ones, and some other companies may be able to go to consolidate it into one vaccine instead of two. So we could get more good news in that front. But at the same time, we could get some more negative political news. So we got to be careful. So that's basically what we're looking at in terms of fundamental outlook. Let's look at the individual data. So yesterday we had very strong Australian building permits contributing to the Aussie rally. Today we had some good Japanese data. German trade data was also good, but I showed the euros anyway, but at least it supported the euro dollar itself. ECB, President Lagarde did not make any comments for monetary policy. So, but we don't have a significant amount of market moving data this week. We have a tremendous amount of central banks speak. So ECB President Lagarde speaking, Governor Bailey speaking, nothing market moving there, but a bunch of Fed officials speaking. Now the FOMC meeting is over, so keep an eye out for that. Nothing from the US calendar today aside from Fed speak, and I think they're going to be neutral for the time being as to see how everything plays out, because we still can't ignore the fact that the US is reporting record-breaking virus case numbers as well. I think business confidence in Australia is going to improve. Chinese data over the weekend was very good too, with trade balance exports surging. Later this week, on Tuesday, we have the employment report from UK, which we talked about. And as I said, I think those numbers are going to be weaker because both services and manufacturing PMIs report a sharp drop. The German ZEW survey is probably going to be, is most certainly, in my opinion, going to be weaker, with investor sentiment taking a big hit from the virus breakout in the Eurozone. Nothing really from the US. On Tuesday, we've got more Fed speak. Australia's got consumer confidence. I think that could improve as Melbourne kind of eased all of its restrictions. And then Tuesday evening, the main focus will be the RBNZ rate decision. So definitely keep an eye out for that. Wednesday is Veterans Day in the US and Remembrance Day in Canada. So most likely we're not going to trade that day, because it's important to understand, whenever it comes to trading, it's important to understand our trading strategy. And my trading strategy, the ZIP strategy, thrives on momentum. And momentum really only happens when there's participation. And when we have a holiday like Veterans Day, where there's going to be less participation in the Northeast. That's that's not that's a risk for us. There's a risk that we may not have much more in the way of continuation in the market. So we'll see. I don't think we'll trade, but we'll see, because stock markets are open that day. They are not closed. So we do have a little bit of guidance there. So we'll see where we're at. I'm not too sure. I haven't made a decision yet, and I want to see how we trade tomorrow. If it was a day where the stock markets were definitively closed, then we'll definitely not be trading, but we'll see. On Wednesday, we don't have any US data, tons of ECB speak, nothing really going on data-wise. Thursday, we have German inflation data, which is expected to be a little weaker. UK's got data dump with industrial production, Q3 GDP, which is very, very important, and trade balance numbers. And Q3 for everyone was a lot better. Q2 was a quarter of pain for every single country. Q3 was a quarter of recovery, although for UK it was still contraction, but the numbers are definitely going to be better than the quarter prior. So that could help pound a little bit. Then more comments to Governor Bailey. Euro's got industrial production on Thursday, and we did have significantly weaker German industrial production, so that should be softer. And in general, as I said, we're looking for more weakness in Eurozone data, and that to really put the lid on Euro and actually push it lower. On Thursday, we got U.S. inflation data, CPI. Gas prices fell sharply in October, so I think for the most part, inflation will remain low. A bunch of oil data, ECB president speaking again, Evans, Williams speaking, PMI numbers from New Zealand. I'm actually surprised this number is expected to be that bad. I think it actually should be better. I think risk is to the upside with ongoing COVID recovery. And then lastly, on Friday, nothing really from Asia. Eurozone's got Q3, the second estimate, not the first one. So we already know that Q3 GDP numbers were better. So these are revisions. So I don't really expect much from the revisions. Bundesbank Wiedmann speaking, and I think he's going to be dovish. PPI from the US, which is generally far less market moving than CPI. What could be interesting is a UMich survey of consumer confidence. And it'll be interesting to see if that continues to improve. So that's basically what we're looking at in terms of data, not much going on. And then taking a look at technicals, I'm super bearish Euros. On the daily chart, it looks great, but I think we're going to start to flame out here. No real resistance in the long-term charts, but except for 120. But I think I don't really see it getting much more beyond that. Dollar yen, huge move today. Resistance at the 50 SMA on the daily chart, but a move like this, I think, has could see a little bit more continuation. Pound dollar, I think, should also retrace a bit, even though for the most part it still is kind of up. Dollar Swiss, this is an engulfing candle. Usually we have continuation with engulfing candles, so we should see that. Kiwi dollar, we rode part of the Kiwi dollar move through some of the crosses. I think Kiwi dollar, because we have RBNZ, it's probably going to pull back a little bit, but still overall bullish. I'm still bullish Aussies. Dollar CAD, I'm still quite bearish, but I think some of the more interesting setups could find itself in Euro. Not necessarily Euro Yen, Euro Swiss, which were very strong. Euro Swiss, we took peanuts out of this move. I should have stayed in, but at least we had the right call. Euro Aussie, I think should come down further. Euro CAD, same thing. The charts don't really tell us too much because they're already kind of oversold, but I think those pairs could definitely move a bit lower. And then so that's what I'm watching for in the zip signals. I know we don't have anything yet. With Eurodollar itself, we're starting to flame out. If you want to take a punt and sell here at 118.90 for a move below the indicator line, but if it goes below the indicator line, I think we could see a more significant move lower. I do think Eurodollar is going to flame out. I think 118.90 could be a really interesting short. Euro Yen I would not touch because it's got the yen component of it. Same thing with Euro Swiss, but Euro COM dollars look pretty good. I still like Euro Aussie short. I still very much like Euro CAD short. I do like them more than the Euro Kiwi short. But maybe if we get a double dip, we could sell, but I don't think it's likely that we will get a double dip. So really the main opportunity I think right now is in euro. All right, so I'd like to open up the floor to any questions you may have, or anything else, any other charts you may want to look at before I turn it over to Boris. So no real question. The euro pulling back, like I said, I think look at the charts. That looks like a pretty solid bet there. All right, fire away, Boris.
Hey guys, how's everybody doing? What an insane morning for us in equity land, huh? My chart looks like the same Valentine's Day massacre. Let me take the control here. Share my screen, share one. Okay, everybody's seeing my future screen. Somebody give me a sound check also. Let me know if I want to make sure you guys are all hearing me okay. Hey guys. Yeah, so I don't even know what to say. I mean, we had such crazy volatility. If you guys traded Nasdaq on the future side, it was like at one point 3 to 4 wide on futures, meaning like there was between the bid and ask there was a 4-point gap. So it was kind of insane. You certainly had to, and, I lost as much as I won, but in the end, I really actually traded very well here. I'm up to $204 for the day, but you had to be willing to take big hits and then go back in because the volatility was just insane today. It wasn't a situation where you could just trade our normal strategy and expect everything to hit perfectly. Still, the critical thing in terms of kind of trading properly was to trade essentially, with the immediate direction of trend. I just wanted to show you. Look at the crazy. Trade sequences here, then halfway decent trade sequences here, and then again just craziness on the open here that I got involved in. I mean, these things are resolving in 10-20 seconds versus let's say 1 to 5 minutes, which is our normal time, which is really super fast. Definitely helps to have the tool. Those of you who are new, who don't have access to our tools, just type in. I'm just going to type this into the box here. Trader tools. Question mark, and right over here, you guys can see, you can download all the tools with the videos of what we, of how we trade these for both MT4 and MT5 structures. But over the weekend, I really kind of solidified the 3 types of trades that we want to do, right? And I'm going to give it to you in the order of accuracy. So this would be in the order of, in the order of quality, right? So the first trade that we love to do, the best, highest quality trade. Let me just get big here. Let me just undo this. The first trade we love to do is what we call the fail trade. I'm going to give you the long example, and then we can take a look at the short example too. But the fail trade is super simple in its structure. We obviously have to have our original setup, which is our MACD lines, the 12 against the 26. In an uptrend, the 12 is above 26. That puts us positive MACD and makes us look at only buy trades, right? So we have that structure first. Then we have to have a reference point. In this case, we have to be selling reference point. So this is a sell candle. And then we need that reference point to fail. So in this case, it's going to fail right over here, meaning our definition of failure. By the way, look how nice MT5 is versus MT4 in terms of me being able to control it. So, sorry, right over here, this candle, the high of this red candle is taken out by the high of this green candle. That's a failure setup, meaning that the buy trend resumes itself. You get long over here. I have no idea if we would have survived a 20-point stop here because the volatility today was just crazy. But perhaps. Let me see. What was the close here? 37 was the low over here. 20. Yeah, you would have actually barely survived. Sorry, I just wanted to. I had a message here. Survive the volatility, and then of course you have a straight up trade. So this is the classic bread and butter trade we love to do all the time. The fail sell in a buy trend, the fail buy in a downtrend. So where would be the fail buy? The fail buy is right over here. So here's a buy candle. This is a downtrend. This is a buy candle, right? And it gets failed, meaning that the sell candle takes out the lows. I think it probably would be over here, right? So we can, let's just give ourselves here. And here you actually still would have survived, and it would have the trade would have been classically positive, right? So if you only want to do the single best possible trade day in, day out on a scalping basis or a day trading basis, this is the trade that we love to do. Then there's the second quality trade. And I actually, I like this trade quite a lot. I would say it's perhaps maybe not as just marked. I would say maybe 5% less accurate in terms of general large number sample size. But still, excellent. I love the trade, especially, and this is a critical thing, especially if it comes first. And that trade to me is the positive signal, the first positive signal. First, this is a critical thing. It's got to be the first positive signal in an uptrend, this is the up arrow. And here we simply do nothing but, buy the close, right? As it closes up, we just simply, buy it. Now, the great thing about this trade is it usually happens early. It's usually a great directional trade. The bad part about this is there's absolutely no way for us to semi-automatically enter it. We can program ourselves to enter a buy failure or a sell failure. It's impossible to program this because the algo doesn't quite know when the buy arrow is going to appear, right? And I actually, it's not inconceivable that I could semi-automate this because it's an indicator based, and I could actually ask Dougie to see if we could automate the buy. It's actually not. I think it's feasible. The more I think about this, it may be feasible for us to semi-automate this. But for now, we actually have to watch this super close, and only when this buyer. You don't want to be doing it here. You don't want to be doing it here. Once you've missed this, if you snooze, you lose on this particular setup. You missed the setup. You got to let it go. But if you did hit it, usually an excellent setup both to the upside. So here you would you'd buy the close here. It's an easy 10 points from there. If we're looking for the sell setup, this would be our first sell arrow, right? Sell arrow, right? So right over here. So I'm short over here on the close, which is 20. It goes up against me to like 43. So this is again a perfect example where volatility today is just enormous. And you really, I don't think you couldn't have traded with our 10 target 20 stop structure unless you were willing to get stopped out and come back in, stopped out, come back in. In these kind of days when we have crazy, today is a crazy volatility day. It's one of those super rare days. Dow is up 5%. The only way to kind of do this is to do this accurately is to trade half size with probably double the stop, or at least maybe not double the stop, but 1.5 stop. So so in other words, I would now have to go 30-point target, 15 points, 30-point stop, 15-point target. I think that's really the only, if you're going to take these kind of very, very clean setups from the start. And today I did stretch my stops quite a lot. I gave them a lot more breathing room, sometimes even as much as 40 points breathing room. And sometimes it bit me in the butt. Like there was a big loss here. Let me just show you. I had a big loss here, right? But I knew that the volatility would revert, and and I was able to make it all back. So you just have to be prepared, mentally for these kind of big volatility rules. But still, sort of mechanically, from a classification point of view, this is an excellent trade when it's the first trade. Now, what's interesting is sometimes the first trade is a down arrow, sometimes the first trade is a failure, right? So that to me is a really, really, whoever comes first is whoever I really want to take in that particular structure whenever I'm trading trend, right? And then finally, there is what I call let's have fun, but try not to get our head handed to us. And this is really only for those of you who are mean reversion minded. like if you do not like to buy bottoms or sell tops, and I literally almost never sell tops, by the way. So the only way I allow myself to trade mean reversion in this kind of a market. Remember, this market is massively upside biased, right? Like there is like a 70 to 30% chance that every day is going to be higher. So it's incredibly idiotic to try to find tops in this market. I only want to sell failures in a downtrend. So I don't ever try to pick tops off the bottom, but I will all the time love to pick bottoms as just to satisfy my mean reversion hints. And that is an art more than a science, and that's just sort of I think a polite way of saying you're gonna get killed much more than you'll survive. But again, here you have to be willing to lose and come back a couple of times, and also understand that that you have to trade small because this is the least accurate but the most fun. If you love to play against a trend, this is the most fun. Again, for most of you who don't, are not mean reversion minded, then it doesn't really matter. But if you're going to trade mean reversion, the setup that I love to do, and this is where I find my classification generally working. By the way, I've broken my rules here big time. What I want to do in my classification is I really generally want to see 2 down arrows, like in other words, double down arrows before I decide to buy, right? In this case, I'm using just one, and you can see I pay the price. I actually win here. What do I do here? I managed to actually, no, I win here because I go against trend here, very lucky, and then I sell through the trend. I'm putzing around here. I don't even have like a legitimate trades here. Oops. Sorry guys, hang on a second. My dog's up barking. That means there's somebody there. Hang on, let me just check. What? Sorry guys, I thought somebody was at the door or something going on there. My dog is a massive guard dog, so sometimes you just see something on the street. Okay, so the point being is that if you really want to trade this kind of accurately, you need I generally prefer 2 down arrows, but let's say we have 1 down arrow in a very, very high volatility trade, then you definitely want only a buy candle. If you're selling hard here, you want a buy candle to form completely before you entertain a possible buy. That's really the proper strategy to trade here. And it's a fun strategy, but I warn you, this is literally the worst of the setups that you can do. But you're bored and you want to do more volume, and sometimes it really does add up to your P&L really nicely. Then it's great. Then it's great. But overall, the basic structures we want to look at. And let's just take a look at the CFDs. And again, it's gonna be super volatile today. So prepare to have huge amounts. Why is this Nasdaq is all? Oh, because it's not. I was like, this isn't right. Okay, so let's just move this over. Yeah, I was like, prepare to have lots and lots of two-way movement. So 20-point stop may not be able to survive, to help us out and survive. Right now, we don't have any setups. We have a new uptrend developing. Markets kind of sold off on the open and generally started to resume the broad uptrend. I mean, news today is super positive, but so much of the positive news is been baked into the price on pre-open that certainly there's possibility for some profit taking. Furthermore, the interesting thing here is that Nasdaq is oh, guys, hang on, I'm sorry. Hang on, sorry. Okay. Nasdaq is a relative weakness today because for two things. Biden election means that he's going to probably do a lot more stimulus to real companies, not just do tax breaks, which help high-tech companies right now. And the two, and this is really the important one, is of course the vaccine news means that if it really becomes real, the real economy comes back, not the fake economy, not the Zoom economy. Today, I don't know if you guys followed my Twitter feed. I said the best pairs trade today was short Zoom, long CAR. CAR is this company that keeps things cold, that is going to be the key component to the vaccine logistics, and to be able the ability to carry vaccine to many people, because vaccine needs to be kept frozen at around 70 degrees Celsius, which is 94 degrees Fahrenheit. So that actually, I said it halfway jest, but that turned out to be like an amazing trade if you trade on the open. Zoom is down 17%, CAR is up like 10. So you certainly had a great opportunity here to go, short one, long the other. But that broader trend of NASDAQ being weaker and S&P and Dow being stronger is I think gonna keep trend. Although NAS right now is certainly put up a nice little recovery. We do have a setup right now, right? So let's play this, just knowing full well that where's the high on this? I'm just putting this high. What's the high on this? 18. Really? Okay, 18. So that's like 30-40 points away right now, as you can see the NASDAQ really coming in. I'm actually impressed at how tight, or maybe not that. No, it's keeping it really tight. They're keeping the CFDs relatively tight. I'm surprised. Let's take a look at the futures and see. Okay, so the futures, we have the same structure. We're going to try and do this on the futures as well. So let's put this at like 99. And I'll put so on the futures, we have a little bit more precision. It's 208, 122.208 to the upside. A volatility massive. If they take out the high here, it could easily, like again, I'm warning you, the 20-point stop may not be enough for us, but we'll give it a shot, and we'll see. We'll let it play out and see if it takes course here. So, also the thing I was going to say is when you have these, what we love to see is obviously clean, long, oops, let me, I'm trying to get rid of this. Okay, I think this is it, yeah. Nice, clean, long, continuous trends. Like for us on a 1-minute chart, we love to see a 60 to a 90-minute trend, because that almost guarantees we have winning trades, because the continuity of the trend is going to carry us higher, and we're going to be able to get in on the runs of when they happen. What is always problematic is these big bursts of price action. This kind of a peak wave, peak crash, peak wave, peak crash on the chart is this very volatile tug of war between buyers and sellers, and that's always a problematic structure for us. A lot of times we're just able to avoid it because those peak waves, peak crashes don't put us into a trade that's bad. But sometimes they trip us into a trade, and then just it crashes on us, and then it comes back and it comes in again. So you just have to be aware that these kind of signature price action moves, very emblematic, obviously, of very volatile two-way markets. So you have to be cautious on trading them. But still, it's actually impressive that the NAS is kind of holding bid for right now. Let's see if there's anything more. Russia is saying that their vaccine is 90% effective. It may very well be. I know a lot of people are very skeptical, but Russia has really very good scientists, so I wouldn't dismiss them out of hand. Let me see what else is going on here. So not much. I mean, I think obviously the story today, the big story is vaccine happiness, Biden calmness. Now, all of this, I tweeted this out, and I think this is a very minor sub story, but we should be aware of it just so you understand the risk. So it's very clear that Trump and all of Trump's followers are convinced that the election is stolen, right? So, and they will do everything in their power to try to not give Joe Biden, any chance at president-elect policymaking until he's in fact president inaugurated, right? And I'm just watching. Let's watch this price action. The other thing that I think I actually wanted to see something. Do I have the volatility on this? Properties. Where's my volatility? Oh, this doesn't have vol. I'm like, why wasn't the vol? Okay, so this one doesn't have it. This is this is the old one. This doesn't have a vol filter on it. That's why I was like, why is it ignoring my vol filter? Because one of the things that we're inevitably going to do is we have what's called a volatility filter, meaning that if the move of the candle is bigger than the actual stop, which in this case is 20 points, it's not going to allow you to take the trade, because the trade is going to be just so has a strong chance of stopping you out before going to take profit. But this one actually doesn't even have the vol filter, so it's this version, it's an older version, so it's going to ignore that big circuit breaker that we have in all the other code. It will. The circuit breaker is in here because this is a volatility version, because it has the V at the end of it. So I don't know if we're going to get any kind of triggers here. What do we got here? The Dow is got negative candle. DAX kind of came back down. So you see with that kind of crest move that we see here, that's not our structure. That's a kind of structure that either doesn't produce signals for us or stops us out. We want a nice, smooth, upward sloping wave on price action. But in an environment like this, you've got you really got very active two-way trading. That having been said, though, by the way, I think if the sellers kind of puke everything, the thing that's interesting about the market is absorbing there's a huge amount of profit taking coming into the market, right? I mean, there's a huge amount of profits already built in because everybody's got all these gap opens. Everybody who is long is making tons of money. They're giving up stock. They're happy to take their profits. And the fact that all of that selling flow isn't pushing prices down is interesting. That means that there is just fresh buying flow underneath here. There are new buyers coming in that are saying, this news is so positive, it has possibility for further continuation. That if we sort of can hold this, this theme for another 20, 30 minutes, the first hour. So in other words, they just sop up all the selling in the first hour. The natural, the path of least resistance is going to be up. If we're going to hold, if the trend holds to the upside on the NAS, the path of least resistance is going to be back up, and that's going to be very, very interesting because it's going to probably trigger more positive trades as we go forward. So kind of worth considering that as we go. Oh, so I totally got off track. So I was saying, yeah, so Trump is a big chaos factor as always, but I think even more so than now, because today is just one of those days, if you're in Trump land, things could not go worse for you, right? If you think about this. Biden wins, we already have a Biden bounce rally early in Europe. Everybody is like, oh, we're back to normal global behavior, global trade relations, easy, steady markets, so on and so forth, right? And then we get the vaccine, which is, Trump's been humping the whole vaccine in his presidency, and Biden is the one that gets the benefit for it, right? So Biden gets the benefit of the vaccine, has record Dow, record Dow values possibly in view. And by the way, look at this big breakout. We're certainly not going to be able to get this on the CFDs, but I wonder where we are. It's probably going to trigger. It's certainly going to trigger us. The futures does not have a volatility filter. So let me get rid of this. Delete. So the futures is going to put us into a trade, but whether, you know, I'm going to be able to survive the stop is a completely different story. So let's see. Okay, so we're in the trade, and obviously this is a typical move. We're going to retrace back out, but let's see if, you know, let's see if it can survive this, you know, the move here. I'm actually going to just put the futures up to 7 because this market is going to move so fast. Boom. Okay, so that's good. So that worked. I wasn't too greedy. This is the key thing is when you have these big volatility breakouts, you don't want to be greedy. Just take the quick win. On the CFD, as you can see, did not trigger because the volatility filter just kept us out of the trade, which is fine. That's why I had the futures account. Those of you who followed me on your own, did great, right? I mean, I'm sure you took a trade without the vol filter. Anybody trading today? Anybody following me? Anybody doing anything anywhere else? Yeah, Galton, you followed me. Good job. Let me see what the let me see. Hang on a second. Sorry. Let me see what's happening in the. I just want to put you guys up here. And so, what's happening on the Dow? So we have a DAX has got nothing because this is very tight moving averages. The Dow. Let's take a look at the full chart here. So this is a deep sell. So we have an early sell signal in the Dow that obviously worked. This is a secondary sell signal. And we can try to set that up as a possible sell signal here against the low over here, which is, what's the low over here? 13. Is it 13? Really? 13? Okay, so we'll do this at 13. So this would be the low. So if, oh no, so now we get a second, we can move this back up now. So second failed buy candle, which is, what's the low on this one? 46. That's proper. That's just right there. Okay. So we had what happens is if we get a buy signal, we try to trade against the failure of that. But then if we get a secondary buy signal, like a higher buy signal, we move our levels to see if we can get a failure of that. Because obviously the closer we are to the fail signal, the better chance we have of actually letting the trade play out. So we'll let that hang here for a sec. Let me go here. Where's everybody? What's everybody telling me? Yeah, they can't count 5. 5 is better than none, right? I mean, it's really crazy move. Although this broke out really strong, so it's fine. Today is going to be a day where we're going to get lots and lots of opportunity for moves. But I will say that the one thing we need to be careful about from a risk point of view is some kind of Trump tweet. I don't know what legal experts say there's very little he can do at this point. The one thing that I think could really destabilize the market is if the counting, I'm hesitating only because even if the counting reverted, it wouldn't make it much of a difference. But let's say the counting in Georgia, which is where you get like 10,000 spread, or counting in Arizona, Georgia and Arizona reverting keeps Biden president anyways, because Pennsylvania and Michigan have like 100,000 pads at this point in the vote. But if they did revert, I mean, that might wobble the market a little bit. I don't know. I stopped paying attention to like them reporting the numbers because they kind of stopped reporting the numbers super fast because I guess everybody assumes it's a done deal, but clearly not a done deal for Trump. So that's why it's kind of a risk that hangs out in the background there for us. So market's really turning positive. NAS is resuming its nice big strength to the upside. DAX is not. So like one of the reasons why I didn't want to take this would be a buy setup for us, right? This buy candle reverses the sell candle. Why would you not take it? The reason I would never take it is because here we do not have a nice clean separation of moving averages. Therefore, we don't have any. It's a flat market. We don't want to trade. We want to trade a trend market. We want there to be a spread between the moving averages. And since there isn't one, we don't want to trade it. You know. So Dow is probably going to cross to the upside, and this whole sell setup is going to invalidate itself. I'm going to give it to the end of this candle. If this candle holds up above these levels, I'm just going to cancel this sell setup because it's clearly not setting up for us right now. And DAX is starting to fail a little bit to the downside. Bitcoin down $900 since vaccine announcement. Okay, yeah. So I think let's cancel this Dow. It's not really setting up for us right now. Looks like the only clean trade we had was the NAS. We took that trade, and that was good. And now we're gonna consolidate for a little bit, let the markets float. Anybody have any questions? Oh, sorry, what do you mean you forgot? Oh, you had a 5 TP on it? You had a 5 take profit on the NAS? Is that what happened, Connie? Oh, yeah. No, I get it. That's fine. That's fine. Okay. So what else do I want to tell you? Oh, if you guys want to look at, we can look at FX a little bit just for fun. I really haven't had a chance to trade FX a lot, but I mean I haven't had a chance to honestly trade FX at all because I find myself I need to have a single single instrument view of the world. But here's Euro. Euro doesn't. Well, Euro has had a sell signal right over here. Remember, I said to you the first sell signal. This is a 1-minute chart. As I said to you, I think the 1-minute charts, even in FX, can be very effective, especially on wide-ranging days like today. So this short easily worked for 10 pips on a dollar yen. Dollar yen, we don't have any signals here. A break above 29. Let's say 30. We go 105.30. That's an entry on a closing basis. That's an entry with a 105.40, 105.10 stop. Cable surprisingly bid, I guess, on the vaccine news as well, because they're just really much more concerned about coronavirus than anything else there. It's off the highs here though. So here's where it went. This is a great example of using our strategy. Negative trend over here, right? The lows is basically 31.80. We close below 31.80 on this candle over here, 79.5, and then there's a straight move down towards the 50s. You had like 5.5 minutes of easy money to make plus 10, minus 20. FX, of course, in my opinion, is if you're trading FX my way, first of all, it offers you tons of trades. Secondly, you can do it in tiny increments, right? You can't trade the kind of time. You can trade it for dime pips effectively on the FX if you wanted to. So you could have multiple positions without really getting hurt. And it's just to me, it's an ideal structure for the algo. I'm still testing the algo. I'm having some issues with it, so maybe I'm reconfiguring it wrong. But we will get it right before the end of this week, and then I'll be able to. We'll do a whole webinar on the algo itself and how we can set it up on the FX side as well and run like a multi instrument portfolio. so you guys could trade widely instead of narrowly. So everybody can get very different type of stuff. How many? Paul is asking me how many take fail trade in a slice. Honestly, Paul, I'll go for sometimes for 3, but if you want the highest probability, just 1. I think 2 is again, it's always contingent. 2 is good if you have a continuity trade. I mean, generally, I think two is weaker than 1. So let's say if 1 is an 80% trade, 2 is probably like a 70% trade. By 3, it becomes like a 60 to 65% trade. You really, you already, once you're at 60, you're below break even, so you don't want to take that trade. So the answer is between 1 and 2. How does that sound? Now I will. Here's the thing: if you're asking me actually a great question. So Paul is asking me how many buys. Let's just take a look at the trading view. Let's see if I can make this a little clearer. So Paul was asking me, how many buy sell fails I want to take. So here's one fail. Really, one fail. There's only one fail here because if you took this one, this automatically would have been inside your trade. You would have taken that trade, right? But what will happen a lot of times, I don't know if I can find it over here, is I'm looking for an example where you can go more than once just because the moving average will kind of converge and then spread out. They don't quite cross over, but they get close and then reestablish trend. The single most important aspect of the accuracy of that trade is that you have some decent trend. That means you have decent moving average separation between the two. That's really the key to doing this. So we're starting to come down a little bit. Actually, I bet you I was a little too premature. Well, not really. No, we haven't broken. I'm surprised we haven't broken the lows here. So it's I gotta wind up the session. But this low over here, what is this low? This is a 46 low, right? So if we break 46s on this, that would be a legitimate sell on the down. That'd be a legitimate sell on the down. So that's a potential trade that could set up. Once I'm offline, you guys can keep an eye on it. For NAS, we had a big downward move. But again, if this candle gets reversed to the upside, we still have potential here for more upside trades. Let me see what this happens here. Yeah, we definitely have some upside, potential for some upside trades here on a reversal move because you've had 1, 2. So I still feel good about taking the breakout, to the 2. So that's it, guys. Okay. Hope you guys really enjoyed it. I know so much of the price action happened beforehand that we didn't get to score too many trades, but we did score 1 quality trade, which is always better than scoring 3 low quality trades, right? And the strategy keeps working really well. I'll keep you updated on the algo. In the meantime, the Zoom new links will be available later today. It's going to be Tuesday, Wednesday, Thursday as always. Probably going to do we're probably going to do 9 to 10 this whole week. Okay, so I'll update the Zoom links and everybody's going to hopefully see me in Zoom tomorrow, Wednesday, and Thursday. Any final questions? Anything else on your mind, guys? Let me know. Want to talk to me? No? Everybody's good? All right. What do you mean alert on the indicator? Oh, yeah. Sorry, yeah. The note. Yeah. You know what? I'll ask Daniel. Yeah, he's just he's in Brazil right now having a really good time. So it's hard to get his attention, but I will ask him about it. Yes. Okay. Absolutely. Thanks for reminding me. All right, guys. Thank you so much. Everybody have a great day. I'll see you tomorrow.